comes to humans and money, there's so much psychology involved. And if you can build momentum, build confidence, and make yourself feel good, it's going to make a big difference as you build towards being debt-free.
Today, we are joined by Greg Keith, a certified financial planner, and we're going to be talking everything beyond the numbers when it comes to retirement planning. Greg Keith is a certified financial planner with Wealth Plan Atlantic and Keith Wealth Management Incorporated. He has over 20 years of experience in the financial industry, specializes in retirement planning and wealth preservation for those who are over the age of 50 with over 500,000 in investments. He is also the founder of the Visual Wealth Project that aims to simplify complex finance concepts, making it less intimidating and more human. Welcome back to the Unpacked and Empowered Finances. I'm Marianne, your host, and if you're new to this channel, thank you for watching us today. If you've been listening or watching us for a while, thank you again. And if you share this episode to your friends, it'll be really helpful to my channel, and it'll help other people as well unpack and be empowered with their finances. This is the channel where we unpack complex financial things and make it more digestible for you. Today, I am excited to introduce our guest, Greg Keith. He's a certified financial planner who I work with at Keith Wealth Management and Wealth Plan Atlantic. Greg, thanks for joining us today.
You're welcome. Thank you.
So why don't you let us know a little bit about yourself before we get started?
Okay, so no pressure. I've been in the industry 20 years. I spent most of my childhood and teenage years pretty much promising my parents I would never get into this industry. My father's been in the business for 40 years, and I spent a lot of time watching him walk around in his suit and a briefcase and thought, that looks boring. I don't want to ever do that. So I was pretty creative, and I ended up taking a more creative path. I went to broadcasting school and then fine arts school after that, and worked for the provincial government in New Brunswick for a little while as a graphic designer, but really wasn't loving my career and ended up deciding to work for my father just as a way to give myself some time until I found out or figured out what I wanted to do when I grew up. And here we are 20 years later. I live in Hampton, New Brunswick. I'm licensed in 6 provinces across Canada. And I predominantly focus on people that are in that 3 to 7 year window from retirement that are really trying to just bring some clarity to their lives. People that have scattered savings at the bank through their employer, maybe with a do-it-yourself investment account. And just trying to help those people out, get prepared for what's next, and organize their finances.
Okay, that's really interesting. And you're back in the art business again because you're doing the Visual Wealth Project, which is intended to make finance less intimidating and accessible to everyone. Now, I know that you just mentioned you usually guide people through the final stages of retirement, but our goal today is to help our listeners who are usually probably new to the country, or some who just finished fresh out of college or university, or maybe just someone who's starting over. So the challenge today, I'm putting you on a mission to answer some questions that would be for someone who's getting started. So my first question is, let's say I just got my first paycheck here in Canada, and there's lots of tools that I've been seeing. Where should I put my money? Should I get started with an RRSP, TFSA, FHSA? There are others, some like RIF. Like if I'm not someone in this business, I'd be like overwhelmed. Where should I put my money first? So given that, where should I put my money? Should I put it in a TFSA or RRSP?
I think that's going to depend on what your goals are. So I know in speaking with you that you work with a lot of new Canadians, and one big goal for new Canadians is to purchase a home.
Yes.
So if that is a goal, the FHSA, which is a relatively new account in Canada, is an excellent point to start. It's kind of like a mix between the TFSA and the RRSP, where you can contribute to a savings account for a down payment for your home, You get a tax break on those contributions, similar to the RRSP. So you're able to deduct those from your income, which will save you some taxes. And then when it comes time to buy your first home and use that money, you can take it out tax-free, similar to the TFSA. So if that is one of your goals, that's probably a good place to start. If you have other short-term savings goals, I'd probably start with the TFSA. And, as you build that foundation, the RSP is obviously another great tool to help you prepare for retirement.
Absolutely. And we can definitely, like, if you're someone who's interested in knowing more about the FHSA, I'll discuss that in the next coming episodes. But right now, I have some questions as well from my followers on Instagram. So they're interested to know if someone is fresh out of college, or of course, they would have some sort of student loans, and some might have already purchased a home, so they would have a mortgage to pay. So how should someone who's a beginner decide if there's a little amount of money that they can save, or maybe pay off the mortgage or pay off any debts? What would be the better priority to put the money on?
Yeah, I would always start with high interest debt. So if there's credit cards, lines of credit, oftentimes those rates can be in the 20% range. If you think about that, you're getting a 20% return by paying that off, which some years you may get that investing, but you're not consistently going to get that over a long period of time. When you get into the smaller interest rate debts, similar to a student loan, which a lot of student loans can be tax deducted against your income, so that's something to consider too. And mortgages tend to normally have a lower interest rate. So my advice would be to focus on the higher interest rate amounts. There can be some psychology involved in that as well. So if you have multiple, say you have a credit card and a line of credit, the credit card might be $5,000 and the line of credit might be $30,000 a week. Regardless of the interest rate, they're both probably going to be fairly high. It can give you a sense of accomplishment to pay off the smaller one first. Yeah. So it gives you that feeling that I've accomplished something. It builds momentum. So that's advice that's been given time and time again. It may not make the most sense mathematically on a spreadsheet. Oftentimes you're going to think, well, I should pay the highest interest rate off first. But when it comes to humans and money, there's so much psychology involved. And if you can build momentum, build confidence, and make yourself feel good, it's going to make a big difference as you build toward being debt-free and continue on that financial journey.
Absolutely. And if I may just add as well, when I was getting started, because I would always have this goal to save some part of my income. And then as soon as I see the money in the bank account, I'm like, maybe I should spend it.
Yeah.
But when I actually have the goal, when I have put myself a goal, okay, I'm going to invest $1,000. I'm going to build up $1,000. When I finally did that, I think because I've hit that goal that I set for myself, it's harder for me to take money out of it. So like I built the discipline. I just built it up like $41 a week and finally made it. And now it's been growing. Mm-hmm. So if you're someone who's getting started, just start with whatever you can and really set that goal, discipline yourself. Now let's talk about Canadian safety nets. So some newcomers would be on the side of the fence where they're thinking, I don't need to save as much for retirement because there are plans that are available that I'm working for right now, the CPP, Canada Pension Plan, and some are not even aware of the OAS, Old Age Security, that we're also going to get. But those who know probably tend to decide, well, maybe I'm not going to save as much for retirement because there's something for me after. And some would be on the fence where, well, we're not going to receive as much benefit because we haven't been here long to contribute enough. So what would be the simplest way for a new Canadian to think about these government benefits? And is it true that my personal savings could make my OAS benefit shrink if I earn too much on retirement?
Yeah, so those are good questions. So let's start with CPP. So the Canada Pension Plan it's a program where you contribute and your employer contributes as well. So in order to qualify for that, you have to be working in Canada. So That's going to be based on how much you contribute. It's pretty simple. It's if you contribute. Now, if you come to Canada, and I've seen this with a few of the new Canadian clients I have. I spoke to a gentleman the other day whose wife was a pharmacist in Korea, and she came here and never worked again. She stayed at home. So in that situation, she won't qualify for any Canada pension plan. Now, he's working full time. He has been working full time for 25 years, and they're going to base his benefit on the amount that's been contributed to the plan for him and his employer. So you can get those numbers from the CRA. You can set up an online CRA account, or you can call them and they will give you an estimate based on what you've contributed so far. I would also recommend you work with a financial advisor who understands how that works. The old age security benefit's a little bit different. So that's going to be given to every Canadian citizen in Canada. So for new Canadians, it's going to be based on how long you've lived here. And I think it's 10 years that you have to be a resident of Canada before you qualify for that. Again, we could go down a rabbit hole with those types of comments, but it is important to know. And I would say, talk to people who understand the benefits and make sure you understand them so you know what you're entitled to in retirement.
Perfect. Now, how much money do I need to retire? Somebody asked me this on Instagram. How much money do I need to retire comfortably? How can a beginner possibly figure out that huge number? And what's the simplest way to start thinking about converting these savings into a steady income later on?
Okay. Yeah. So I get asked that question every single day, or almost every day, is what's a good number? Am I doing okay compared to my peer group, compared to other people in my age group? Am I doing good? And there's no way to really answer that without having a deeper conversation. So I know you, and you are not spending money on expensive cars and expensive meals and expensive jewelry. So for somebody like you, it might cost a lot less than somebody who, is driving a $100,000 vehicle, who's taking 4 or 5 trips a year. So I think you really have to dig into your own lifestyle, your own expectations of retirement, and say, what am I comfortable with? And am I going to need all these things in retirement? Because, just because we stop working at some point doesn't mean we're going to stop doing the things we enjoy or stop wanting to. So that number could be very small for some people and very big for others. It's all going to be based on lifestyle and expectation. So I would start by just keep it simple. Take a blank piece of paper and list your expenses, list whether that's your necessities or whether it's your luxuries. And ask yourself, is this something that I'm going to want to continue in retirement? And that'll help you come up with a number. Now, is that a realistic number that you can achieve? That's a whole other conversation. That's when you probably want to work with a professional and get them to help you figure that out.
Yeah. So it really is about you. So someone who's thinking about how much do I need? It depends on what your answer would be, what your goals are in the future for yourself and for your family. So you are a certified financial planner, and for our audience who are often starting at a big bank, like myself. So when I got started, I got the Newcomers plan, which are good. But as you go through, as you know what the options are, and there are other financial institutions that can help you as well, not just the bank. What is the core benefit of dealing with an independent advisor like you or like myself versus relying on a free advice that they get from a bank advisor?
Okay, that's a great question. So there's a lot of great people that work at banks, and I honestly believe that the majority of them want to help their clients and they want to do a good job. Unfortunately, they're in an environment that's very restrictive. So if you walk into one of the big banks, you're only going to be able to buy the products that the big banks sell. Oftentimes, depending on what their goals are, you could be pushed towards, a certain product that maybe you don't understand, maybe it doesn't meet your long-term needs. We see that often with bank tellers. Again, I'm not picking on the people, but they're able to sell GICs to their clients. Is a GIC a good fit for that client? Who knows? But there should be a deeper conversation about that, and they should be speaking with somebody licensed. So on the independent side, we don't work for a company. So as a firm, you and I are under Wealth Plan Atlantic, but Wealth Plan Atlantic doesn't have a product shelf. We don't have RRSPs. We don't have mutual funds. We don't have insurance products. And we work with, I think it's well over 30 companies that we have access to. So if you come to me with a specific problem, I can look at many different companies and say, okay, who's going to solve this problem the best for Marianne? And where I work for you and not the company that we decide to use, let's say things don't go as planned and maybe that company disappoints us. We have the ability to fire that company and find another company that can help us solve that problem. And I find that very powerful. So I see it as myself or you, we work with the clients and we're a team. And we go out and we hire the company to do their job. And if they don't do the job, we can fire them.
That's true. And you can do that as well. Because sometimes the tendency as well is to just stick with what you've already started. But that's your money that you're putting in at a certain institution. You can change it. You can move it to another place where you think it would be better for you and your future. So you have that independence as well on your side to decide. Excuse me. So we talked about visual wealth project earlier, which you make the complex simple. So that is key for beginners. Now, if you were to draw one final actionable sketch for our audience, one single thing that we should do today to secure our financial future, what would it be?
Okay. I'm going to backtrack a little bit on the visual wealth project that I've been working on the last few months. As I mentioned, I have a background. I did some courses in broadcasting. And one thing I learned in broadcasting is they try to simplify the language, whether it's in journalism too, whether it's print media or whether it's radio. And the advice we got is you want to tell the story, you want to deliver the news in a grade 6 equivalency for language. So there are a lot of people that have a lower reading level, but it also just simplifies things and helps people understand them. I also have that art background, and I thought, there's so many people that just don't understand what's going on with their finance. We've got RIFs, LIFs, RSPs, CFSAs, FHSAs, we've got ITPs, we've got, I could go on and on and on. So my goal was to say, how can I take these complex accounts, strategies, language, and just simplify it? So with the visual wealth project, my goal is to take some complex financial scenarios and simplify them, bring them down to a grade 6, grade 7 language. And I also use some visuals with that. Now, to answer your question, I would recommend people start with a blank piece of paper and think of it as a compass. I'm not necessarily sure drawing the compass on a piece of paper is going to help you figure out your financial goals. But if you use that analogy, it ties back into your earlier question about what is enough, how much do I need? You really need to figure out where you want to go. So if you can take a blank piece of paper, figure out what's important to you, figure out what your fixed costs are likely going to be, and then you can kind of build that compass of this is where I'm at. I want to go in this direction, and then start working towards that goal and taking those steps that you need to take to get there.
Yeah, that's true. And especially to our listeners who are starting on a blank canvas, that's really good. Something to think about because you can get started. You can restart if you've started before and then you failed. It's always a good thing to have a guide, a compass to get you through your goals. So thank you very much, Greg, for sharing your insights. And I hope that our listeners will find value to it. And if you did, please share this podcast to your friends, to your neighbors, to anyone you know that you can get value out of this episode.
Thanks, Marianne. Appreciate it.
Thank you.